All right, ladies and gentlemen, I hope you're having a wonderful evening. It is a Thursday here in 2024, but this one is very special because it is the day after Jerome Powell and the first rate cut since 2020, and my goodness, was the reaction insane. We had a lot to deal with during the event. There was a lot of tension, and then the market reaction yesterday, it was absolutely tiny, and everybody thought it meant nothing. And then this morning, the NASDAQ gapped up. I think you were almost up 3% at one point. The SPY hit a new record high, and everybody's feeling good, but the problem is the rates were just cut, and if you know, you know. There's a lot we have to talk about, so I have a lot here. We have a lot to unpack, everything from plays to info to what's about to happen next, the plan that we're on, and what could potentially happen. And then best of all, we're live, so we're going to be answering a lot here, like live and in the flesh. So you know the vibe already. It's Thursday. We are live. If you are watching the recap, I love you. I hope you're doing good, and I hope you know too, just for everybody, we are live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. Wait, something went wrong? Is that showing you my YouTube? Oh, man, where is it? YouTube.com/. Oh, there it is. Boom. See, this was Jerome Powell. So we'll see you there. We're live every single day. Make sure you don't miss it. I don't know. Sometimes you won't see the recap, so you got to be there because, well, I mean, it really depends on the days. But if we do start getting more data here, I mean, hopefully you'll find out by the end of this watch list when you need to be tuning in. So I have all of that. We have the plays, the keys, all of that good stuff. But here's the problem, or here's the good part. I gotta say what's up to my people who are live, baby. Are you guys ready? Are you ready? Plays or not, baby? What do you got for me, baby? Huh? Good evening. What's up? Oh, what a TW. Shout out Trading Fraternity, the Skechers news, and the Nike call out. You got earnings plays, 2 standard deviation on the dip, baby. Oh, he said prepay the plug. Wow, you're next level, man. God bless you. Good evening. What up, Unan? What up, Hi Dear? What up, RJ, Joey, NRJ, Dano, Robo, Profess. Oh, we got the Twitch in the house. What up, Professino? Jerry, what y'all? What up, Malik? How we living, Uncle Terry? Good evening, PNC. Good evening, Mr. Sullivan, Mr. Ravari, Ken, Skinny, Dino. What up, Ram? What up, J-Biz, me, not yo. Kyle, how we living, baby? What up, CeeLo? What up, Daniel? What up, Edgar? What up, Laurie? Oh, how you living, baby? Oh, Brian Fierros. Mr. San Diego. What up, Jiggly Taylor? Oh, my goodness. We ready to go. Do you see this? China, bro, that's kind of a disappointment. China did not cut rates, so after everything, maybe China might have a little bit of a drag. I think some people thought they were going to cut rates there. That's on the wire. I don't know. You guys see this? That's why I'm talking about that. But good evening. I hope you guys are ready. And honestly, we didn't have a watch list yesterday. It was a very big day. It was literally historical. So I'm sure there's going to be a lot of questions. I plan on covering a lot here. So even if you're on the recap or not, you're going to learn today. And then even then, just make sure you guys watch the last watch list because there was a lot coming into this. And even then, the stream for Powell is up there. And you could even see my live reaction when it was all said and done. But here is the deal, Chatadonia. To start it off, I hate to break it to you, but with how the market played out, doing nothing on Powell and then gapping up, and then literally maybe I should have showed you the chart one more time here because I hope you see it. You had your gap down. Oh, the what's it called? The high-low ticker is getting in the way, but you had your gap down and then you gapped up today, but like you didn't move at all. You realize after 7 hours you ended exactly where you opened up. So it was weird because you like had a reaction and you didn't, and then everybody felt some type of way yesterday and they were kind of confused. They're like, why is TOT not doing this? Why is this happening? Why is that happening? And honestly, it was a very fascinating reaction. If you literally go to the live, you could hear me tripping out because you got to watch this price, and something very unique happened. Probably the first time we have witnessed this happen ever, or in a long time, but this is the first thing you wanted, a soft landing. How the market reacted and this reaction you have gotten from the market, this is what I believe is the market responding to the soft landing. After Powell cut, people really believe that, hey, Powell is about to accomplish his mission. They're lowering rates. We're expecting more. The dot plot is showing more, but they're also kind of worried that both things could come back up, but also in the sense that it's still going to take some time and it's going to be a little bumpy. The way that the bonds kind of priced in the move and didn't go and react, it's telling you again how they feel on the future. It's lining up with the Fed, and if this doesn't make any sense to you, here's the beauty. I'm here for you today because literally this is the first time in a while where the market got what it wanted and it didn't ask for more. So literally what I'm trying to say with all of this, like after the rate cut, you literally had Powell lower rates. You had the dot plot show more rates in the future. And remember, I was showing you guys in the preview how how the market was already expecting a certain amount of rate cuts. If you went and looked at the 10-year bond, it was already in the 3s. The 2-year was at like 3.6. The market was already pricing this in. And you know what happened? Powell came in yesterday. He gave an extra big cut, which was kind of funny to a degree, but then he acknowledged that they're going to be cutting and that there's going to be more cuts. And what did the market do this time? Instead of seeing Powell cut rates, they were like, yeah, that's good, okay. And then they acted like this was perfect for the soft landing. Are you understanding? The best way I could, my analogy for this, since you like my analogies, and it's just weird, and I'm talking about the market's behavior, it reminds me of the brother in Home Alone. I don't know. I think you guys, the scene in Home Alone where he gets in trouble, and they're like, apologize to your brother. And he's like, well, actually, and he acts like offended. You know what I'm saying? The market is oddly acting way more behaved. If you don't understand, this is what I was tripping out on in real time when it was happening. The bond market is behaving. Buzz, exactly, yes. Yeah, the bond market is acting extremely well behaved. In other times where the market was pricing in 7 and Powell said, I'll give you 3, then the market said, we want 10. Or if Powell said, okay, I'll give you 4 and the market was pricing in 5, the next day the market would want 9. Are you guys following? So that kind of happened yesterday where Powell did a big cut, an aggressive cut, gave the market what they wanted, acknowledged the future curve in the next couple of years, but then everything halted. That's what I'm saying. None of the bond market ripped for a little bit, so did the yen, and then they're like, that's good. That's what we want. And then they're like, yeah, and then, well, maybe this is it, and this is what the soft landing is. So that's why they're saying, and unfortunately, this is exactly what I told you guys coming into it. And I even made a mistake. I'll show you when we get into the plays, because what ended up happening, and you see it, the short landing plays worked. The short end of the bond curve, remember I was telling you, if there is a soft landing, the short end of the bond curve is where you want to be. If there's a hard landing, the long end is where you want to be. Well, the short end, the short-term bonds, those are the ones that got the bid there. So you could kind of see it, but really the bond market was oddly well-behaved after all of this happened, but this is what the pricing of a soft landing is looking like. So that's the first key, and if you're not understanding what really happened here, the Powell just lowered rates. It was expected at the last minute, remember, and it was actually kind of funny, and that's the beauty. I love that we have the live stream, and you could go watch the recap, because even then, even if we're watching the recap right now for the watch list, because you got to see the last-minute expectations in real time. We had 12,000 people when everything came out, or I think at least 9 or 10,000 at the release. There was a lot of people there, but you got to see how everybody at the last, they were like, 25, 50, 25, 50, 25. The odds up into the final 5 minutes ahead of the release, they tilted towards 60, and that is what became expected at the last minute, and then Powell did 50. So that in and of itself, that was already surprising, but like I'm saying, it was kind of expected. But what happened and what the conclusion is out of all of this is the Fed and the market now are aligned. The word that you're going to hear a lot of people in the media use, and this is what Powell said even during the press conference, is that the Fed is recalibrated. Recalibration. And that literally just means Powell is now caught up to what the market was pricing in. Let me see if I could show you guys the dot plot chart that I had. Where was it? Please hold while we connect your call. Oh, I had the why this should have been this should be on deck. I apologize. Forgive me for the delay. Is it because we have all these thumbnails? I wanted to show you guys the dot plot. Again, that was the one that we were going over yesterday. Yeah, I was like, there you go. So this is the one, and what I want you to see, because if you want the visual, sometimes the visual helps you guys who don't understand it in words, and I understand it's kind of complex, but remember, the green line here, that was the Fed, this is the median, the white line was the Fed futures. Remember, the Fed futures was ahead of things, and even coming into it, the Fed futures, you could even see the OIS. This is kind of making another implication. There was indications that the market in the Fed futures, they were pricing in a lot more cuts, and essentially after today the Fed was like, yeah, we agree, and then met up with it. That's the recalibration, but there's a lot of irony to it. Like I said, if there's 50, I have a lot of my own opinions on this, and I'll share it with you here on the next key here too, but essentially I think there is going to be a hard landing, and I mean the simple way is you could call it a recalibration, but if that just means Powell was behind. Powell doesn't want to say he's behind, but because, again, they went big. 50 is big. Any other time you've started with 50, there has literally been a crisis. It's like he should have done 25 in July. If he didn't do that, even if you don't want to acknowledge that, it's like he's late in so many ways, man. So, and it's very unfortunate, but the whole point is now, after all of this, the Fed is kind of recalibrated, and for now, the bond market has not asked for more. And that's what I keep telling you. Just for now, the Fed and the market are matched up. So do you guys understand what I am telling you right now? This is very, very important. So you have a brief moment where the Fed and the bond market, the Fed futures, are matched up. So at other times, there's been a little bit of divergence. As we move here into the future, they're going to diverge. But for now, they're matched up, which is kind of rare. So that's why it's like, we'll see what happens. Either the Fed is going to signal more from here, the data is going to signal more from here, or the bonds are going to react to any of the above or anything else that happens. You see what I'm saying? Yeah, well, it's like, how long will it last, and then what other things is it going to move? So hopefully I think it's very good info moving forward, and that's what's, again, a lot of people, you're going to have to be patient here. Like I'm saying, I am expecting a hard landing now. I already was, but, things are going to take some time. I mean, maybe it does happen faster, but you do have a lot of different things to watch, and now let's slowly see what happens as we get into some of the next events. So here's the deal. When it's all said and done, I have a final analogy for you. With everything going on and how the market's reaction. Again, you literally had like people saying it's priced in, and then you had it taking off today and everybody saying risk on, and now you have everybody saying it's going to be soft landing. And again, you see it. People are very, very excited, and a lot of people, again, they're even saying that like, wow, 50 basis points is good. This was the first time that you've had 50 basis points, I think, go up, except for like 08. I think that was the only other instance where the Fed has cut by 50 basis points and then it went up. So yeah, you like this analogy? Well, this is how I think the market is reacting, because at first, we're just going back to normal. Look at, like, if you don't get it before I say this analogy in words, like, just newsflash, we were already melting up. You know what I'm saying? You were already doing this little melt up regardless, off of the expectations and everything else. We were already up here. It was like you're just going back to that. That's why it's not like you had like a mega 5% crazy move and this is the buying opportunity of a century. It's just like everybody, you got a gift, 50 basis points, but the way the market's acting, it's like you got a new car for Christmas, but you knew you were getting it in November. You know what I'm saying? It's like finding out. For me, I remember I got an Xbox, my first ever Xbox, but I knew I was going to get it in advance for Christmas. You know what I'm saying? So that right there, it kind of feels like the rate cuts for the market. And that's what the media is telling you, though. The media, and that's what I'm saying, like, it does seem like the media is trying to tell you. They're like, hey, you got a car. Like, look, you got your rate cut. Powell's doing this. Because, again, I don't like any of it. I was telling you yesterday, if they go by 50, It snitched. Yeah, even the yield curve, even the fact that the yield curve already uninverted prior, and it was 50 basis points, and they cut by 50 yesterday. So that's it. It just front ran all of it. It's crazy because he cut by 50. He should have done 25 or none at all, but it's insane that he started with 50, and I don't think that is a good sign. The way I was telling everybody, this is what you have to do. Like, it's just simple. Say it out loud. We just cut rates with the stock market at all-time highs. You just cut rates by 50 basis points because stocks are at all-time highs, and the economy is great. You just cut rates by 50 basis points, a large amount, because the real estate market is the most expensive it's ever been in the history of mankind. You have to say it out loud. Why? Like, you got to think that's exactly what just happened in the last 24 hours. So, again, people are saying we're going back to, and I understand it. That's what I'm not saying. Is this like insane in a monetary policy sense? No, that's what I'm trying to tell you. I'm not buying what is being sold. I feel like everybody's trying to sell this story that Powell didn't fall behind, even though everything reeks of falling behind, like 50 basis points. And everyone's trying to say, oh, it's good. This is just us going back because inflation. But I'm like, what about real rates? And what about a lot of these things? So I'm just not buying it, to be honest with you. You know what I'm saying? And that's, like I'm saying, everyone's kind of viewing it like you got the car. We already expected it, but that's it. Everything is good, and we're going to normalize, and everything's roses. But the way I'm looking at it, that's it. I feel like the market, it's like somebody giving you a really like nice over-the-top gift because they're cheating on you, and they're a narcissist. That's what it reminds me of. So if we end up getting the hard landing, that's what this is going to feel like, because everyone's like, oh, 50 basis points is great. Look, it's great. Risk on. And, yeah, this is it, the economy. And again, we might run for a couple of months, but if it ends up turning to a hard landing, that is going to be where, again, you might look back at this. So I could be wrong. I will tell you, I learned a lot in 2023. I've been humbled at many opportunities. So that all this being said, I'm not touching my long-term, and there's a couple of things that we need to look out for, but I'm just, I've watched this for a while. I've had a lot of these theories. Certain things are playing out, and, I'm not going to immediately do anything, but I do think the opportunity is getting close where if some things obviously start showing up, then I think we'll know. So we'll find out. I don't think you got to go too crazy. If I'm wrong, toast to that. I think it was a good idea, and I hope it doesn't cost too much. I'm going to try not to chase any dragons with this idea, but if anything, it's probably just going to make me move a little more cautious, and that's what I would do. Again, that just 50 basis points, the rate cut. There's elections and a lot of things. We might have to see where things go from here. So keep that in mind, but there's one more key. The final thing, man, moving forward now, again, that's why I think these next few months are going to be literally crucial. And it's funny because now we're back in a weird reset because we don't know where things are going to go right now. The Fed futures are matched up here with the Fed. So the data moving forward is going to cause more volatility. But the other thing that we got to worry about is, or not really worry about, this might get in the way, is that the data so far has been calm. So as long as it stays calm, yeah, the data and how that develops, that's going to mess with us. But if everything just stays within the same range and the data doesn't, 0.1, 0.3, and it's just dead BLS manipulated, you know what I'm saying? Then that's it. At this point, this is just a one-way ticket till the election. And that's the thing. Even if you guys don't realize it, yesterday was the last Powell before the election. So the next time that you hear from Powell, you will have already voted for a new president, believe it or not. So keep that in mind in the final thing, because I talked about this today. Like I'm saying, we don't, and I'll start this, you don't really know, again, the reaction yesterday, today was wild. And I'm going to tell you guys now this. Are you ready? Literally, tomorrow is a huge expiration. It's the final quad witching before the election as well. And then there's also like a S&P market, NASDAQ rebalance. So there's a lot going into it tomorrow. Even like the price action and how weird everything has been, there's even more of that that's going to be taking place tomorrow. Yeah, so a lot of futures and rollover, all of that's expiring. So we don't know how things are going to play out. That's what I'm saying. The market, and then again, if any data, there's a lot of global tensions, but you be on watch. I'm telling you, this is it. Everybody needs to be on watch, whether it's hard landing, soft landing. This is where things get juicy, whether it's before election or after. But that's where, again, even something can happen before election. You never know. But the one thing I'm keeping an eye out is value stocks. And I was explaining this, and you could see this through the soft landing logic. What happened today as people were like, soft landing, guess what? They just cut rates by 50 basis points. The dividend stocks didn't go up. The safety names, the value names, they didn't go up. That's weird. Because they should be. If there was going to be that rotation, especially with some of them that are the unprofitable stocks went up today. Unprofitable Russell stocks went up, not the profitable value Russell stocks. Oh, I don't know if they feel me. So that's huge because that's showing you the opposite of everything. So watch, because over the next few months, even for the long term, before adding more dividends or not, we need to see, is it going to be, if everything rallies and they start dumping value and dividend names into this, my goodness, it's going to, I would even argue inflation will reignite. But if the value names kind of hold that safe haven like they did leading into this, then I think everything back according to plan. So we'll see where it plays out. But Chattadonia, all in all, this was literally historic. And I don't think anything moving forward, man, like you're not going to have any shortness of opportunities. It's about to be even a new year, man, a new president. And like, this is crazy. So it's the long term is hitting new all-time highs. But even then, trading opportunities and other things with protecting your money and all that, man, there's going to be a lot of these opportunities. So get ready for it, baby. I hope you are all locked in. So now, let us get into the plays. So, right off the bat, I want to go over the plays, and then we'll do questions afterwards. So that way, if you have any, because again, it was a big day, and I think it was really, really big with rate cuts. So I'm going to go over the plays that I'm looking at. Then I'm going to go over the plays that I made over the last 2 days, and then we're going to do questions. How does that sound, Chattadonia? That sound like a plan? I'm going to take a sip of water. It's not really a sip. I just chug like half the water bottle, to be honest with you. Water good. Jimmy like water. Like the video. What? All right. So, right off the bat, play number 1, baby. Beto. So, I made it free. We'll go over the play, but I sold half of them. This thing gapped up in the morning, and I'm telling you, keep watching it. I would be looking out for variations of the Bitcoin plays. So as long as they are underperformers, if you notice, and be careful, if the cheaper it is and like the sketchy miners, they could still clap you. But like I was even looking like MSTR, but they were kind of expensive. That's why we looked back at it today. The Beto was a good play. The Beto trade's a little weird, and you only made it gets crazy because Bitcoin gapped up like 6%, but we only made a little bit more than 100% on the play. But compared to any other Bitcoin options, Beto was a great play. It profited pretty well. So I liked it. I made it free, though. No risk, and now we're going to be able to watch it. But this was the winner following Powell. So I'd watch it. I'd watch it moving forward. Don't force anything. But if you notice, kind of like the bonds, if you notice one of these days in the next couple weeks, or like I'm saying, you guys got to realize if tomorrow is a big expiration and a big rollover, maybe by Tuesday, there might be a little bit of a reset, and then go and see where these plays are. So that's play number 1. Then play number 2, Nike, Habibi. Is it the Nikes? Take out the trash, Habibi, the Nikes. So I bought shares after hours. I bought 50 shares, a small amount for a flip. We have it in the long term, but you'll see. So there's 2 parts of it. Number 1, I bought the shares after hours because the CEO news. So there was news that this current CEO of Nike, who has been there since 2020, he is stepping down. He'll be in charge until January 25. And then the prior CEO, the old CEO, he's coming back. This is almost like Starbucks, bro. This is just literally like, what's his name? Howard Schultz leaving, and then the other guys fuck it up. And then Howard Schultz comes back, and then they put in the new guy, and then the new guy messes it up. But remember, the other day, Starbucks, when they had the Chipotle guy just brings a lot of hype. But when he came on, that stock did really good. So remember, Nike, they have not been doing well. So if you go and you see Nike, this is why I bought it in the long term. I mean, you know, they were struggling. Their last earnings, remember, we hit like a 2,000% or whatever. It was a great earnings play, but they've given up a lot of gains. People were worried about the consumer and them. So they were struggling. So the CEO change, if the market really likes it, if there's a lot of upgrades, I think this could have a ton of upside. So we're going to see that. It's a very good question. Changing CEOs right before earnings. It could be bad, but I think that's exactly what Starbucks did. I think they did it give or take before or after. But it could be bad or it could be good. You never know how they're going to sugarcoat it nowadays or trying to build momentum. So we'll see, but that's one part of the play, the long term. It's going to love it, but are you ready for this? You'll get to it when I get into the plays, but I also made another option play on Nike during the day. I actually, 2 hours before the close, I made a play on Nike for earnings, and I went out till October 18th. So we were talking about FedEx, and I had the FedEx earnings, yeah. So I did October 18th. So I'll go to the play here when we're done with it. But so unfortunately, though, this one, we'll see if it holds up. It could be decent, but it may not hit the same. So I'll show you when we get to it, but I already did an early setup for earnings. So I got lucky by getting prepared early. So yalla. But that was play number 2. And then finally, play number 3, baby, FedEx. So this is the one for earnings. And honestly, there's already been a lot of post-FRE earnings with FedEx. I'm telling you, we have seen a lot of these. So I think you might F around and get lucky tomorrow. It'll be a Friday. The rebalance might be weird. Or even, again, think about tomorrow. If your stock doesn't go crazy tomorrow, it might go insane on Tuesday or Wednesday or Monday or Tuesday. You know what I'm saying? Again, that's just sometimes what happens with these rebalances. Welcome to La La Land. So watch for it, but definitely see how this plays out tomorrow, and then watch for any broader signals. Again, we just had a 50 basis point rate cut, and then even today, so I made the Nike play around the Starbucks news. So there was that news today, Skechers, they came out at a Wells Fargo conference. We got this right when it came out. It was crazy. They just warned about their margins, China, and then freight cost, and then Skechers, Decker Outdoors, Nike, and then somebody else, Crocs, I think, they all died off of that news because they're all in the retail space. So it was weird because Skechers gave an update and you saw a broad sector of names react. So UPS kind of reacted already, but like see if transports and people kind of get freaked out about a bad FedEx. The conference call wasn't that bad. They guided down. They were on the lower end. It wasn't good. And they did say some things with demand and then cost shifts and other things. But for the most part, it wasn't abysmal. It didn't seem terrible, like terrifying, but you never know. And then we'll see how people want to absorb it with this type of environment. So we'll see how that plays out. Should be interesting, but those are the main plays. As far as everything else now, here were the plays that I made. So yesterday on Powell, prior to Powell, I doubled down on the Bitcoin idea, but I went small with the variations, and I grabbed a coin 205 for 35 cents, or I think it was a little cheaper. I got mad, though. They popped up to like 60 this morning, and I'm not going to lie to you. I just forgot that I had it, and I forgot to sell out of it. So it's still up. We'll see where this is at. I have a little bit of time, but again, I found a cheaper kind of further out the money variation play of the Beto. So that was the play I made. And then there was the HubSpot news. I did like a $10 snake. That play got clapped. It went up for a little bit. And then I actually doubled down on TLT. This is where I made a mistake because I bought TLT and ZB. And here's the thing. I think TLT has a shot, but it's a very, very small shot. But it's already coming up now. But the point is, I guess, here's the deal. I think you might be able to salvage the play and get out with break even or a little gain, but I don't think it's going to break out by September 30th unless there's a crisis or unless September is absolute dog water. Are you understanding? So what I should have done is should have went with Shy. We should have played the short terms after Powell, but again, I thought it was aggressive. I think this was because of my bias. Because when I was looking at the dot plot, and that's what I'm saying, it seemed like the market went more to soft landing. That's why we should have bought the short end, but there's still a chance with the TLT, but I think it's going to play out. Here, I want you guys to see the whole chart. I think it's going to play out like literally like August kind of. So I think you're going to, that's what I'm saying, you might in the next couple of days, I think if we get a retracement, you'll get back above the hundreds and you'll be able to salvage a little bit of money from it. But other than that, if there's no big major economic decline, then that thing is gone. So that's what I'm saying. That's where I made my mistake on it because I was feeling it, though, when I was looking at the dot. And I still think there might be a chance, but that's just sadly how it's going to work. But I would keep my eye out for, so I have the ZB future. I could hold that. I'd be down to snipe some certain bond plays with the right time, but it's not really, it's like you need time, sure, but like you kind of want the market to either hand them to you for no money or we like very, very cheap, or we want everything again to line up where it's either going to be a hard landing, things are going to deteriorate. You need it to either match up with the data or it's going to have to be a black swan or the Japanese yen or kind of some patience there. That's like I'm saying. Otherwise, the short end of the curve is going to be the winner. So just as long as the market keeps eating up this soft landing shit, TLT is going to trade low because it's wild. You got to think about it. This is bad. This is insane. You guys got to, this is where some of you, if you were disappointed by TLT, you might be even more disappointed. Because look, bro, you're telling me long-term bond yields are higher today after a 50 basis point cut than prior to SVB? What? Fuck out of here. That means, bro, that like butterfly, the doldrums of October, bro, the bond yields are like the same. You know what I'm saying? That's crazy. But then again, that just goes to soft landing. You see what I'm saying? No, it's not scamming. It's just the more and more you get soft landing, it's like the long end of the curve is underpricing a hard landing. But at the same time, as long as the data and the attitude goes more towards soft landing, the short end of the curve is running up. That's where you're getting it. But the long end of the curve is still vulnerable to inflation reigniting and them not really following along with the plan. You know what I'm saying? So there's a little bit of denial, yeah, but that's definitely like, it's BS. That's why I'm fascinated by it, but it's like, come on, no way. This is what I said. Again, go back to the main key that I'm trying to say to like sum up to today or yesterday and what happened is like, dude, this was like the first time in a while where the market got what it wanted with bonds and rate cuts, and then it didn't go insane and go crazy. That's why it's like, huh. So we'll see, though, but it's only been a day. So you know what I'm saying? It might change up a little bit, but for the most part, that's my thinking. So I added another like $200 on there. So we'll see. But again, I hope you made the TLTs free. So I didn't make the TLTs free because I've been doing good on other ones and I've been getting gambly. But honestly, I can't stress this enough. Every play we've gotten into, they've gone green for a little bit. Make them green. That's why this morning I made my Beto free. So this one had a low cost basis. That's why I think we might be able to get break even, or you're only going to get like a little bit back and then you got to dip out. But we'll see. Otherwise, that's the two plays. I'm still in the bond. I was down a lot more on the bonds, but I think I'm down like 1,500, and then I'm still down on the yen from prior, but I'm still holding that yen too. And I might get out of the yen right now. We'll see. I'm down like $600 on the yen, so it's not too bad. But I'm still going to be holding those and riding those out. And then today, these were the plays that I made. I sold half of the Beto. I have 50 contracts left. So I bought 100 at 8 cents. And I told you guys, I told you live even then. That was before I think I stopped telling you the plays. It was after the Beto because you guys just kept harassing me. So I was like, geez, man, just watch the watch list now. You guys are done. It was literally, so I told this one on stream, 100 Beto at 8 cents. And I sold half today at 19. So I bought 100 for $800. I sold out 50 for like $950. Got my money back, a small gain, and now I have free Bitcoin near the money towards the end of the year. So we'll see what happens with it. But that was the first play, and then Citi. If you guys remember, I had old Citi calls, and bro, they came back from the grave, and I sold out for like a 30% gain, and then it went like 80 cents in the money afterwards. I was like, what? That's crazy. So that was second play. And then number 3, I did believe this one is a weird one. I don't know if this one's going to surprise you. But I went with a next week NVIDIA 135 call. Only grab one, very small exposure. Just throwing out just in case. Risk on, man. That's it. Just if people want to get crazy, I do think NVIDIA, because I was saying there's a possibility, and I was worried, and you kind of saw it, whether it's soft landing or we go back to whatever we were doing. I was like, watch out if we go back to this market where it's only NVIDIA holding everything up. You know what I'm saying? High concentration in the mega caps. So if that could happen instead of a value rotation or broadening out. So threw a cheap play on there, less than $20. That was the third play. And then finally, I don't know how these are going to play in the morning. Here's the deal. If you are watching the watch list right now or you're here, you might be able to get these plays the same price I bought them for. Or if they gap up, there might be a window for like 30 minutes or an hour where these come down. So it depends on how Nike opens, because again, that Nike news just gapped it up like 9%. I think it's holding up 7%. But I did make a play on Nike. This is the one I was telling you. I went both ways preparing for earnings. So during the news, I was just thinking of it, and I was like, you know what? We have FedEx, there's Skechers and all this stuff happening. So I was like, let me just get my earnings plays 2 standard deviations. I think I went a little bit further, but then I got more time, and then I wanted some of the cheap ones just in case we got more volatility. So that news after hours is just hooking me up. But I bought 10 Nike $60 puts for 11 cents, and then I bought 10 of the 105 calls for 10 cents. And this was for October 18th. So I might make them free. I might let these ride for a little bit, but just don't chase these. Don't go crazy. Again, none of it's a recommendation, but I have noticed sometimes with these plays, like even if there's a big gap up, there might be like a small window where you still can get them cheaper. That's what happened with the TLTs before, the event. They popped up and then they came down. So we'll see where it ends up going. But again, like next week they have earnings. So then the week after that would have been October 14th. But then I just grabbed the October 18th. So we got a decent amount of time, and then we'll see. And the open interest and everything's small. So it should be a good one, and then we'll see where it takes us. But other than that, my friends, that was it. Those were all of my plays. That's all we did. Welcome to the post-rate cut Powell. And that is all that I have that is prepared. So if you have any questions, the floor is yours. The floor is yours, Chattadonia. The floor is yours. Shout out the long term. The long term's amazing. It's been loving it. Thinking about pre-holiday stocks, honestly, not a bad idea. After September, man, October is a little rocky sometimes. But then, remember, November, December, January is, really good for the market. So it's there. I'm still holding TLT, yeah. So I'm going to hold it. If it gets back up to, break even or a little bit above, I'll exit out. But otherwise, I think it's going to be either total loss or that scenario, break even or small gain. But like I said, I think it's going to move like August, and we'll get a window. It's because it's already came up. Even futures right now on bonds are looking good. It's not like it's down and out, but just the nature of the short-term play and how far it's going to be very, very difficult. But I am going to be shopping for some other ones, but for now, I think we're going to hold some other things. Options are coupons, my friend. Amen. The UPS. I love UPS for the long term. I think it could be there. No, I still have my play on the yen. I should have sold at least one of them. Oh, I sold out the Zaza. I forgot. I had the ZQ. I sold out of that for like $450. That was my rate cut play on the futures since they did the double. I profited off of that. But I still have the yen. That went up. I was up a couple $100, or I think like 1,000 after, and then it flipped red, and then I'm in it, and now I'm down like 600 or 700 now. It's moving around, but I'm going to hold that one for a little bit. But the yen's going to get interesting. But yeah, tonight they have the Bank of Japan, but we're not really supposed to get anything. I don't know. Did they actually do anything? I forgot. I haven't been looking. Yeah, Zillow has been crazy. Redfin as well. I don't know, man. It's weird. Real estate. So again, part of this like soft landing dynamic, you had like real estate, like REITs went down, but then like real estate service providers went up. It was wild. But yeah, Redfin has been on a tear, and Zillow. Should you triple down on TLT then? No, not in the short term. So you're gonna need to space it out. Like I'm saying, unless the market runs into a wall, if they keep eating up this soft landing, realistically, if you want a bond play, you should be on shy. So you should be on the short end of the curve if you believe it. Otherwise, you have to wait until the hard landing or evidence of a hard landing shows up for TLT to reignite. But TLT is going to hold a higher range. Does that make sense? So you got to realize it. It's not like, that's why I'm like, it's not like TLT is down and out. Like rates are lower and they cut rates. So TLT can still hold a higher range. But if you want it to like really go insane, go below 3.5 and even lower, you're going to need to run into a recession or negative data or data that starts pointing to the downside. I don't have Disney calls. If you're looking for earnings, I don't. No, actually, I think I have an old Disney. I have an old 110. I don't know when I grabbed these. But otherwise, Disney earnings, I'd wait a little. Netflix might be a better bet. But Netflix is expensive, but that's going to be next in a couple of weeks. The yen should be up if we drop rates, and they're just saying because the yen popped. It popped a lot right away and then came down because the fact that it was all expected and then Japan's not expected to move, it was kind of a could have been worse effect is how it is. And again, it's what I told you guys even a couple weeks ago. The yen too, the yen will only get stronger on hard landing. It'll hold this range, but it's going to need hard landing. That's why it's funny because I'm saying Powell really just did some hard landing shit. And the market's like, no, that's not hard landing. I'm like, oh, come on. The one time, like every other time that he didn't do anything, the market overreacted and then priced the bonds again in 2021, 2022, 2023. And now this time where he actually cuts rates by 50 basis points, now they're like, oh, no, it's fine. Everything is chill. So, yeah, that's why it might take some time. But for the most part, they're all going to kind of hold up. TLT par is 100. I'm not too sure. I don't know how it operates or where they're. I haven't checked even the holdings as of lately, to be honest with you. That's why, again, I like some of the options here if we get velocity, but I have just been trading the bond futures of Papa John's. No, I did not see that. SPY just recovered. It did. I mean, it was very good. Again, I said this right as the reaction happened. I said it. I think it's going to be short-term bullish, and then mid to long-term, it's going to turn sour. That's why that's the title of the video. The market's bullish, and then I believe this is my opinion. Like I said, I could be wrong, but I think we're going to get a hard landing. That's why I'm like, we'll maybe give it a little bit. Maybe after the expiration, the market starts moving how it normally does. But usually when Powell kind of acknowledges a deep pricing of the market starts to get more aggressive. But this time around, it really well behaved, like Buzz from Home Alone. He got bullied at 50. Wouldn't that mean hard landing? He didn't want it. I mean, I don't think he got bullied. I think he was willing to do it, but I think you got to realize he was just late. That's it. At the end of the day, Powell did make a mistake. The question is, was it a large mistake or a big mistake? That's it. Why? Because the mistake was he should have cut in July then by a quarter. Because if you're trying to catch up, because what's the same as cutting as July, cutting twice today or yesterday? You see what I'm saying? So he doesn't want to admit that they made a mistake in July, but they don't want to make a mistake or admit that they made a mistake and that the economy is deteriorating rapidly. You see what I'm saying? So both ways, he made a mistake somewhere, and that's it. Well, no, I don't even think perception is right now. Again, that's why for now, it's funny because yesterday I gave you my opinion right away in real time, but like you people were nervous, man. That's why you saw how he didn't move, and then you had the gap up. So everyone is still kind of, they want to believe it, but they are still kind of worried, but they mostly believe it. Again, still 70-80% odds of a soft landing, but when it's all said and done, I mean, wait till after this expiration. I think that's getting in the way, to be honest. I think the price action is confusing people. And I think this rollover and expiration, I think we're really going to see some stuff after that. Because for now, people are just kind of like, oh. So it's there. I mean, even then, so I'm saying, like, without looking at anything subjective, without looking at his tie, his attitude, anything, it's just the fact of the matter is, he came in with a 50 basis point move. That's just historically a very, very large move. And it's usually not indicative of an adjustment, and it's there. It's just like nobody adjusts your hair. If you're trying to line me up, you don't put like a number 2 on the razor, if that makes any sense. I guess it'd operate in reverse, but the whole point is what he did objectively when you look back throughout history, it's not a good sign. And like I said, usually when you're cutting rates, it's because you're spurring the economy. It's because you want something to happen. Like, so think about it. I don't know if we're worried about inflation or the economy or what, but like, say it out loud. The Federal Reserve literally just cut rates with stocks at all-time highs. Stocks are the most expensive they have ever been, the S&P 500. And so the Federal Reserve just cut rates. The house prices are at all-time highs, and even over the last 4 years is 3 times the Fed target in terms of CPI inflation, which is still rigged. So we should cut rates by half a basis point. Not even by a quarter. Not even once, twice, in one time. So that's why I'm saying, like, to me, it just feels like, what do you mean? You're doing all of this and you're telling me this is because things are good. So you're telling me this is great. So again, I forgot what analyst said it. There was an analyst who said it. They used kind of my doctor analogy, but they said it a little better. They said it's like the doctor giving you medicine, or the doctor being like, hey, you're in really good health. You're very, very healthy. So here's a prescription for a lot of medicine. And you're like, why? Am I sick? He's like, no, you're healthy. We just want you to keep staying healthy. So here's medicine. There you go. Here's 50 basis points. So remember, Yellen used to write prescriptions, but now it seems like Powell is. It's kind of wild, but it's a good example. It's a good analogy because I do think it is. That's why I'm saying it is kind of wild. Like, why are we doing this? If you're telling me unaffordability of houses is an issue, things being expensive, even though, the rate isn't going up, things being out of range and crushing people under high rates, and you're telling me we want to lower rates when the price of everything is high. Still. So, I don't know, man. We'll see. But welcome to the first rate cut, man. Why do you say he's July? When do you say he's early? I don't. Well, that's what other people would have said. But you would have say he's late in July because 50, if you just chopped it up twice in July, that's it. And he said it. They said that if the jobs report came after, they would have cut. Because remember, he brought it up and other people brought it up. I don't think he should have cut. I think this is all nonsense, to be honest with you. I've said this prior. I've said all you're perfectly healthy. Charge the paddles so we could keep you healthy. What the fuck? So, but like I've said this though the whole time. Like I think this is insane. I think they should have waited till real rates came down. Everyone's like, oh, but inflation, they would have been late early. No. Just, dude, housing is triple the target. Food is still double the target. And I could give you like 10 other industries that are above the 2% target. And then the only thing that's down is fucking gasoline because you seasonally adjusted it and it has a 15% impact. And then fucking Joe Biden, who is batshit, he's your president, you don't even fucking know it. He dumped 90% of your oil reserves in a year, alongside Japan and everybody else. So, you know what I'm saying? Like, come on. Like, and then you mean to tell me you're going to cut rates? And that's like, chill, no. Like, I don't know. I'm not buying it. So I don't think we should be cutting rates. I think if inflation was truly coming down and some bigger things would have hit target, or you would have at least had real rates at an appropriate restrictive level, and you would have been there, and it wouldn't have been this little game, more or less. You've been saying hard landing. You think next year? Well, I'm not putting a time frame on it. That's why I said and maybe I'm wrong. I want to be humble about it. You never know, and I don't want to lose money on it. Like, my main objective is to be safe, and I don't want to miss out as well too. So I just want to make sure I could protect everything, and I don't want to miss out of like. What I mean is upside and downside. I don't really care if I miss out anything on the downside, but fuck that. Like, I don't want to. I'm telling you, bro. I'm not. You better have a long term. You know what I'm saying? You don't want to miss out being a little hoe and then not having anything in 5 years because you read a Zero Hedge article and got scared. You know what I'm saying? So when it's all said and done, ultimately protection. But we'll see. We'll see what happens. We'll see what it brings. But like I'm saying, I have a belief, and maybe it's there. Maybe I'm biased. My bias, like I said, it kind of clapped me when I made a trade on the day of Powell. But I'm seeing it. I'm learning it too in real time, and I'm acknowledging it. So, but at the same time, it's just like it's really hard for me to believe it. I don't know, man. I'm a hard sell. Like, you don't think I want to agree with everybody else, bro? You know how much fucking easier it would be to just smile and, you know what I'm saying? Like, I'm not trying to be edgy. You know what I'm saying? Like, I'm not trying to, I'm not trying to be edgy just because. Like, it's like, I wish it'd be a lot easier if I could just agree and be like, yeah, okay, soft landing, great, everything's fine. This is perfect, yeah, beautiful, but I don't know, it just does not, it does not click with me. It does not click with me, so. That's where I stand, but I don't know. Hopefully, it's good because I've always stood there. I've stood in my sandbox in the same place. I haven't switched sides, so I'm not opposed to switching sides if the right evidence is there. But again, I was telling you even prior, if they do certain things ahead of time, it only confirms some of my beliefs. But it's going to take time. That's the funny part, or that's going to be the weird part. I don't know if it's funny, but it's just going to be tricky. It's tricky to rock around a rocker cut. That's right on time. It's tricky. Tricky. This long term is my recital. Long term is very vital to hold some stocks for 10 years. I think it's very much. It's tricky to hold the long. No, okay. Yeah, we did it, baby. We did it. So, not bad. Very good hour. I think an hour well spent, no? I think we did good, Chattadonia. So, is there any final questions? We got to get ready for tomorrow. We got to find out, be ready to go. And that's it, man. That's it. Maybe two. I need to eat. I need to get my final pro in for the day. I got to eat, bro. I got to eat. What we got? Do the bricks? I don't think the bricks will be deployed. But I do think the Bank of Japan invented Bitcoin. I think that's more believable than the bricks taking it down the dollar. But then again, I'm pretty cuckoo. But then again, so is believing the bricks to a degree. You see what I'm saying? What time is it? I believe it's 6:56 p.m. I like oil. I'm still in my oil plays up a lot. There's a lot of geopolitical tensions. So if it's not the election that moves us leading into the next couple of weeks or months, I mean, if nothing crazy happens with rates, the economy, or the election, I mean, it's going to be geopolitics and oil. That's the part of commodities and the soft landing that's going up. And like I said, if commodities do start to rip up, then that will be the next snitch on everything else. Show the plays. I left DVR on, so you could just go back in time, my brother. Look at that. Have fun for the whole family. Fun for the whole family. Yes, what's it? What's Trump's bricks in gold? I don't need the bricks. I'll make them use the dollar, or I'll beat them. I'll beat them up. I'll box them. You don't use the dollar, we won't use your oil. I'll use my own corn, ethanol. Love ethanol. Love corn. Street corn. Great corn. I have a little street corn dip. It's like salsa. Too bad I built the wall, but I love salsa. Good salsa. Great salsa. I know. They try to kill me again. Can't stop trying to kill me. But you can like the video. That's what you could do. It's good. I'll see you tomorrow. In the morning. Good. Yeah, I see you in the morning. In the morning. All right. Goodbye, guys. I gotta go. You're good. I've never ended a watch list like this. It's fun. I'm gonna make. Follow me on Instagram. I just made one. Take pictures. You take a picture. Look, you take a selfie at the trading fraternity. Don't fall for the fake Joe, the fake Josh. Fuck you. Don't fall for it. Yeah. Anyway, you have a good night. You're gonna see you in the morning. Everybody, turn it off. My horn.